You know the dream, right? Being able to spot a stock just before it takes off. Getting in before the big rally, before it's all over the news. That's what every trader is after. To get in early, feel confident about it, and just ride that wave while everyone else is scrambling to catch up. But how do you actually separate a real home run from all the noise out there? Well, let's dive in and figure that out. Here's the problem, though. For every single one of those amazing, genuine breakouts, you've got dozens of fakes. You know, those moves that look so promising. They pull you in, and then the floor just drops out from under you. So the real million-dollar question is, how do you tell the difference between a real opportunity and a really, really costly trap? So this is really what it all boils down to. On one hand, you've got the genuine article, a powerful, sustained move that's backed by a ton of volume and real conviction. And on the other hand, you have the fake out, which is just a trap that reverses on you in a heartbeat, leaving a lot of traders holding the bag. Trust me, being able to tell these two apart, it's everything. Okay, so to spot the real deal, we first have to understand why it even happens. Every breakout, every big move in the market, it's not just random. It's born from emotion, from pressure that's been building and building. This isn't just about lines on a chart. It's about human psychology playing out in real time. The best way to think about this is like a pressure cooker. Imagine a stock that's been stuck, just moving sideways for weeks, maybe even months. There's this key price level, the resistance, and it's acting like the lid on that pot. Underneath that lid, buying pressure is just building up quietly, getting hotter and hotter, until eventually that pressure just can't be contained anymore. And when that lid finally blows, boom, it sets off a chain reaction. First, the demand for the stock just completely overwhelms the sellers. Then you see the volume explode as all the big players jump in. And finally, you feel the entire emotion of the market shift. Disbelief turns into excitement, and suddenly everyone wants in on the action. That right there is the anatomy of a real move.
All right, so we get the psychology behind it. Now let's get practical. How do we translate that into actual clues we can see on a chart? We're going to focus on the two most important signals you absolutely have to master: resistance and volume.
First things first, not all resistance levels are the same. What we're looking for is strong resistance. This is a price ceiling that's been tested over and over again, at least 2 or 3 times. See, each time the price bumps its head on that ceiling and fails, more and more people start watching it. So when it finally breaks through, that move is way more meaningful and a whole lot more reliable.
And this brings us to what is, without a doubt, the single most important rule in this entire explainer. Seriously, if you forget everything else, please remember this: no volume, no breakout. Volume is the market's heartbeat. It's the ultimate lie detector. It tells you whether the big money is actually backing the move or if it's just a lot of hot air. So what does that actually look like? Well, a true breakout needs a huge surge in volume. We're talking at least 1.5 to 2 times the average daily volume. And honestly, sometimes a lot more. That big spike is your proof. It's the sign that large institutional players are putting their capital on the line. Without that confirmation, you've got to be extremely skeptical. Okay, so we have our main ingredients: a break of a strong resistance level happening on huge volume. But there's one more tool we can use. Think of it less as a primary signal and more like a final check-in, just to gauge the health and the strength of the move. And this is where we look at the Relative Strength Index, or the RSI. For a really healthy, sustainable breakout, you want to see the RSI sitting in this sweet spot, right between 55 and 65. This tells us the stock has some really strong upward momentum, but, and this is key, it's not overextended yet. In other words, it's still got some gas left in the tank. And here's a critical word of warning for you. If you see a stock breaking out, but its RSI is already screaming past 75, you need to be very, very careful. That usually means the move is already overheated. It's become too obvious, and you might just be buying at the very top, right as all the early folks are starting to take their profits. You're late to the party.
So, let's put this all together. How do we turn this into a simple, repeatable process that you can use? Let's build our final action plan. Think of this as your go-to checklist for spotting a high-probability breakout before it really takes off.
All right, let's walk through it. Step 1. Find that strong resistance level, one that's been tested at least 2 or 3 times. Step 2. Look for the volume to actually shrink, to dry up, right before the potential break. That's a great sign that energy is coiling up. Step 3, you have to wait for a price candle to decisively close above that resistance line. A little poke above it during the day, nope, that doesn't count. Step 4, confirm that close with that massive surge in volume we talked about, at least 2 times the average. And finally, step 5, for that last confirmation, just check that the RSI is in that healthy 55 to 65 zone.
Look, at the end of the day, spotting a breakout isn't about getting lucky. It's about having skill, a plan, and a whole lot of patience. Every powerful trend out there starts as a quiet setup, one that's really only visible to the people who are watching and observing, not the ones who are chasing the headlines. So the next time you see a price start to move, don't just ask yourself, is this a breakout? Ask yourself, is this just the beginning?